So it's time for the business news now on the programme. Quite dramatic, in fact, in Asia. Now, that's because Chinese equities, really they plunged almost 9% at the start as traders returned from their extended Lunar New Year break. Of course, coronavirus really hitting the markets there as traders fear the outbreak could slash global growth this year, just as economies had been showing signs of stabilising. Can we bring you up the board, bring up the Asian markets if we possibly can? There we go, just about on time. 8% it is down now, the Shanghai Composite, but dips as well on the Nikkei and the Kospi in Seoul. Well, let's cross live then to Bangkok. We're going to speak to head market strategist for AxiTrader, Stephen Innes. Stephen, of course, we got that drop, had been expected, but nearly 9% at the top there.
Yeah, it was a little bit further than we had expected, but as we've seen, the market has sort of settled in around to that 8% level, and that's pretty much on what market expectations were. Look, we knew it was going to be a big earthquake when the market opened today, but it's the aftershocks that the market's really focusing on, and it's a little bit calmer than expected, so business as usual, so it seems for the time being.
Yeah, you say aftershocks. I mean, presumably everyone's going to be watching very, very closely those latest tallies of the number of people infected and whether this seems to be under control or not, and that's really going to affect things going forward.
Yeah, it's pretty scary, really. The numbers can continue to escalate, and fortunately, the mortality rates aren't ticking up, and that's sort of keeping risk on a little bit here because we're still running at around 2% mortality rate. Most of the deaths are occurring in Wuhan, not globally, so that also seems to be buttressing risk sentiment a little bit today. Well as risk sentiment could be buttressed after a 9% plummet at the open.
And the central bank at least reacting, pumping 1.2 trillion yuan into the economy.
Yeah, good point, Stuart. I think that eases immediate concerns of the market. I think there was a lot of expectation we could have a massive crash today, but that seems to have soothed a lot of temperament. And at least for today, anyway, we can focus on be thankful that we didn't get that crash that a lot were expected.
Stephen Innes, thanks very much for joining us. Head market strategist for AxiTrader, joining us live there from Bangkok. Now then, let's have a look at